Welcome back to the channel, and as always, if you are copy trading, you're an absolute moron and you deserve to lose all your money. And with that out of the way, we're gonna look at today's stock called Evolent Health, ticker EVH, which is a company that I started looking back in February this year. So let's take a close look. What has the company done since then? So I started looking around here at entering a long position and decided to leave it there because I felt that that current valuation, the low 30s, was pretty much all the juice I could get at that stage. And even though they had a good earnings report after that, you can see here that the stock went on a spiral down from 35 to 27 between March to where we are now in May. So it seems that I did the right thing in terms of holding off. Um, I was hoping to get into the levels that we currently are, preferably a little bit lower, but I have initiated a starter position here, primarily because first of all, the technicals are quite appealing. So we have an RSI of 29, which is quite low. As a matter of fact, I entered yesterday, and you can see how the stock is up a little bit today, and that RSI is starting to pick up back again. But also, I felt that at this valuation, it was a pretty interesting entry point because if we look at, for example, when the market was collapsing for this type of companies, healthcare tech, you can see that the valuation was coming down from very, very high levels all the way to 2022 and 2023 when it reached the kind of multiples that you see in a company that you would find typically in this sector, so mid 40s. Currently it's trading at 21 times, 21.7 times next 12 months PE, which is a historical low for this type of company. If we're looking at it from a perspective of uh, tech company where we would normally use price to sales, the multiple is actually quite reasonable, is 1.3 times. But where does this leave us compared to some of its competitors? If we are looking at, for example, PE1, we find other peers in their sector that have much, much higher valuations than these guys do. So that makes me believe that assuming that the company achieves the projections that they have set up for this year, we could see higher price driven by that margin expansion that they expect. So you have, for example, other competitors. So competitors such as, for example, Viva Systems, Certara, Progeny, those guys are trading at a P1 of 32 times, 37.5, and 46.80. Now, Evolent is trading at a P1 of 23, which is a slight premium to the sector, but certainly nowhere near as high as some of those peers. So additionally, there is an interesting differential between PE1 and PE2, and that's because the earnings of the company in in 2024 are expected to rise by almost 40% this year and next year as well, with the revenue rising 25% and 15% next year. So those two, the revenue for this year and next year growth is well above those competitors that are trading at a premium, whilst the valuation here is quite compelling. Now, in terms of what's been happening with the company, these guys, let's have a look at a description about what they do. So they offer specialty care management services in oncology, cardiology, musculoskeletal markets in the United States. That's not such a great description. Here's what is really important. The company provides is a platform for health administration, and particularly in value-based healthcare. So essentially what they provide is a platform for these healthcare companies to manage their patients. So when we look at where we are and considering all those projections that I just went through, I firmly believe that it's likely for the stock to come back to a reasonable multiple. We can call that 25 times, which at the projected next 12 months earnings should equate to a price of $34, right? So that is the price that we achieved at the beginning of the year. So essentially, by getting long exposure to this stock here, I think that we can be simply retesting those levels. And there are plenty of options for us to look at that. So I have bought some September calls at the $30 level. Should be quite easy for this to pick up back to those levels. And the company overall is getting pretty solid analysis from Seeking Alpha. So for the time being, I'm going to go along this one. It's a bit of a probabilistic trade, but I think I like the valuation. I like the projections. I see management doing good work towards driving those KPIs. And I think the technicals are in favor as well. We can see this channel going up and down. So primarily, I haven't identified anything that has driven this sell-off between March and April. I think that was primarily due to market fears regarding interest rates punishing certain tech companies out there. Because in terms of the tech sector is a sector that has been struggling quite a bit lately, but I haven't found any negative catalyst to drive this movement. So I think the market may have gotten a little bit overly pessimistic here. The debt to equity ratio on this stock is less than 50%, so it's not crazy high. We'll keep an eye on it, but I think it has a good chance to come back to these previous levels. So I hope you enjoyed the video. Subscribe and see you soon.